Hello, credit union executives. Welcome to See You on the Show, where we give you up-to-date information on how you can reduce risk, keep key talent, and take a strategic approach to your personal financial wellness. Hosted by me, Doug English, a certified financial planner and former credit union insider with ACT Advisors. Welcome to See You on the Show. We're delighted to have Mark Rosa and returning guest Mike Macchiarola back on the show. We're here with Mark Rosa from Jefferson Financial Federal Credit Union. You've been a CEO for many years, I think 21 years at Jefferson Financial. Got a really interesting story to tell. So Mark, thank you for joining us on the show, and let's just kind of walk back. Let's just tell the story of Jefferson Financial and all the mergers that you've done over these years. Let's just kind of start with the history of the credit union and where the original SEG group, and then how you came to merge in all these credit unions over these years.
Doug, thanks again for having me. So my career in credit union started in 1985. I got into an office manager position for a $3 million credit union. So that's been a long time ago. But if we're fast forwarding, so I've been in this role for my entire career in credit unions, which is the 41st year. But moving over to the one that's meant the most for a variety of reasons was coming to the Jefferson Parish School Board Employees Credit Union, a state chartered single SEG credit union. Got here in 2004. We were serving the school system, and that was it. So we had a couple of board members that were thinking a little bit more progressively than they had previously thought, meaning to get away from a single SEG. And I was asked specifically, okay, we want to grow the credit union, said the board, and they didn't know what that was particularly meaning. So, okay, the usual steps, maybe get a community charter, maybe consider mergers. They never considered those before. You got technology things to consider when going into that. We had antiquated technologies, and it was work to do. So through since 2004, that's what we started doing, and we were applying for increased areas of, like underserved areas and so forth, getting away from the single SEGs, starting to take on other SEGs. And we started growing, and we were open to mergers. So we probably did, since I've been here, 7. So that was the whole number of them, that because prior to me, they didn't merge anybody in. But that was required. The greater New Orleans area where we operate is a tough market to crack. It's basically a bank town. It's not so folksy like other places in Louisiana, ones that I'm very familiar with. They enjoy growth a little bit easier than I think we have, and I think that's been echoed by many people that understand the area here. But we went from, it was right under 100 million to almost $1 billion in my tenure, and it was through doing everything that we could put our hands on that made sense for us. There was nothing really off the table. We got secondary capital. We got some mergers, and the smaller mergers turned into larger mergers as other people in the industry looked to us as we were kind of the ones to be with in the greater New Orleans area. So that all brought us to that high point of about 960 or so. And we had other things on the table waiting to propel us into the over 1 billion mark. So we were probably, when I got here, about number 20th in assets in the state, and we rose to number 2. So I really attributed collecting professional staff on the way, because we needed to do all those things. And I'm awfully proud of my people. I'm awfully proud of my board that saw that this was the thing to do, and they were supportive in that way. And I think a lot of people from the original SEG, the original school system, they're not financial people, but they were supportive in every way that they could be, and that's what brought us to that high point.
When was that, Mark? When did you hit that 960 number?
2018.
2018. Okay. All right. The 7 mergers that you brought, these were all credit union to credit union mergers?
Yes.
Okay. All right.
From 1 million, believe it or not, the smallest one was 1 million. The 2 larger ones were about 130 million each.
Very good. So that, substantial undertakings 7 times. right? A big
Yes.
substantial. So then in 2018, you get to the 900 million level, and then what happens?
Well, not first of all, NCUA was like, you grew too fast. It's like, yeah, with your permission, we did. Because we wrote to the region, we did everything that you're supposed to do. I mean, it's their forms to fill out, and they mandate that you fill them out. So imagine that. We did, they got approved from the region. Then they said, well, let's take a pause for a year and let's stop growing. Let's see what's going on. Okay, that's fine. It's not like we haven't been examined before. The real change was, of course, when COVID came in, and I'm thinking that might have been a change for a lot of people.
Hmm.
And after that, that's been the fight since then. It wasn't just COVID, and it was all that came out after that. It was the government's response, and lack of deposits, and people down here started spending money like crazy, and that's when assets began to shrink, consolidate. And so you fast forward to today, and we had to really, really look at things very critically, and maybe make other decisions.
So COVID just really is what shifted the growth path of the credit union. That's what, because it sounds like you were just steady grow, and then you stopped. And then
That's right. And Doug, what I was describing before is, I think the greater New Orleans area is not so much the credit union town. When you're adding on other credit unions, it was you add 100 million to your assets, and believe it or not, you grow by 100 million. But keeping that and combining all of the, for the members and things, you're going to lose. It seemed like every merger, you wake some people up in the merging credit union, and they may be not happy for one reason or another. But this area, even it was before COVID, it was hard to maintain membership growth. It was always difficult. And again, not so much like you're going to kid yourself, but when you're adding mergers on, we just grew by 10,000 members or 25,000 members. But to keep them around is always been a challenge for this area. And I was working with the league, working with other peers of Bond to say, what can we do about net negative membership growth in the area? That's one thing. If I was growing members and somebody else wasn't growing members, that the word competition comes to mind, and that's okay. But it was like this area was always difficult to maintain your memberships. Even when you're doing all that you can with the products and services, doing everything what you can about locations and good staff and good service and all those things. So it seemed like to maintain that growth, it would be like you would have to continuously be merging credit unions in. And that's what we were realizing. And of course, and again, COVID changed the whole equation for obvious reasons, but we were realizing that right around that time when we were cresting in the largest asset size that we ever were, just saying, how are we going to genuinely keep growing in membership?
do you remember how much that 920, I think the high point was? Like, how much did it go down to in 2021 or 2020?
Not per year. It's hard. My memory's not that good, but we had, let's say, out of 960 or whatever the assets were, we probably were topping out at about 65,000 members. So today we have 45,000 members. So you go from the top where you merged in and you get all the membership and you could claim the high point. Well, then you go and you purge some of the stale accounts and zero balance. You get what you're supposed to be doing to get a real picture of who you're serving. But it's been through the last couple of years that's been the most difficult. And I do talk about being on the podcast. I do a little radio work here, and I have for years, but I was describing it very publicly. Like the credit crisis, that was nothing. I mean, that was easy. That was champagne, and we didn't have any trouble there. We actually were growing our portfolio. We were doing very well. But this was the most aggressive set of circumstances that I've ever seen in financial institutions. Way worse than the credit crisis, I think, and making sure I'm describing that accurately. going through COVID and then the government's response and then the inflation that followed and then the interest rate increases, talk about interest rate risk, uh, all of those things combined and people's reaction to COVID, people coming out of, we were at work, we were considered essential. So I didn't see any difference. I was coming to work every day. But you had people that they couldn't work like restaurants. I mean, they couldn't work for I don't know how long. So what they were doing coming out of COVID, they were spending money like there was no tomorrow. And that's where we lost a lot of assets. We lost a lot of deposits. I know we weren't the only ones. So all of those things combined were very, very aggressive. I'm sure I'm not the only one thinking that way.
Yeah, it was hard for sure. Very difficult times. Now, was your board the same board over that long period of time? Did you have folks that stayed with you, or did your board turn over in that 2018 to 2021 time?
Very little turnover. Let's put it that way.
Okay,
Yeah,
so
very little.
Same folks for a long period, and that's what you're
Yes.
used to seeing, right? That's what you're used to seeing in credit unions.
Yes.
Very, very long-term board members. So, so things become very difficult for the credit union after a long period of outstanding growth. And
Yes.
then what do you do from there?
Well, that's it. So, you built for 1.2 billion and our infrastructure and staff and products and programs, all of those things were, I think we did decently about forecasting what we would need to do. And I think we did those things. So when you start sliding back and you're built for 1.2, then you're going to have some earnings problems. And we did. So it was, telling my board what the state of affairs was, not that they weren't seeing financials every month, but if you're talking about a lot of the volunteers that aren't financial people, it was like, well, this is just going to get better. Maybe, for some people it might have gotten better, and because of the economics in their area, whatever else was going on with them, but it wasn't getting any better for us. I would have had to retreat like so many companies do. Walgreens of late, we got to close 2,000 stores and stories like that. I think that was coming to us to say we got to downsize seriously. Reverse course on many of the things that we did to reach this size when we're not that size anymore. So we got to, right size the ship, which would have taken on a lot of pain. Or we were getting courted for the first time in my career, courted by credit unions saying, why don't you consider merging with us? Fast forward to today, and that's what we're doing.
A fairly amazing change of sort of direction from being the acquirer, being the big fish swallowing up the smaller fish, to actually giving serious consideration to being absorbed into another credit union. Like, how did you make that mental journey, and how did you guide your board through that mental journey?
Well, okay, and first of all, through all of my 41 years, I never had, just over the last couple of years, it was just so concentrated. In the 39 years prior to that, I never had anybody. I genuinely think I'm accurate here. Nobody ever said, why don't you merge with us? Never, so I didn't, that didn't hit my head. But in the last 2 years, I had not only a credit union ask, and one that, we're in a transaction with right now. There might have been 7 credit unions asking me to merge with them. Some made no sense at all, but they were asking. They didn't have anything to lose. So it's like, well, I'll dial this guy and talk to him a little bit and see what he says. And on top of that, we had 3 banks calling us saying, please buy us. 3 community banks that couldn't take it either. So I'm like, I've never seen anything like that. Again, in a very concentrated time. So to answer your question, that was just a flurry of emotion and everything else going on in your head. It's like, well, we really have to digest this well. And we did make a run at one of the community banks that was very well run, and they had a good portfolio, about $150 million bank, and we were outbid, and that was the end of it. So, but we were doing something that we never had thought of doing before. So I had a couple of other board members to transition on, people that are like high ranks at local CPA firms and things, so they would know their way around the financials. I needed that, and we have it. But it just got to the point where, okay, even if I'm merging in another $100 million, and that's going to do wonderfully to my deposit base, and that's going to do well to my net income, and certainly add pluses, it was nowhere close to where I finally woke up one morning in this greater New Orleans area. Never were we encroached on by people, just others looking to expand. So we had two $4 billion credit unions that were all of a sudden not coming. They're here. So that's where I walked into a couple of board meetings saying, guys, I mean, this is real. This is not, theoretical. This is not some strategic plan where we all sit around eating bologna sandwiches and talking about pie in the sky idea. No. This is here. And you could look over here, they have a couple of branches, over here they have a couple of branches, and they were some of the ones calling me, multi-billion-dollar credit unions, saying, what do you think? So that's where the reality came in a way that it was never presented to us before. And it's just a business decision. So let's put the emotions aside and ego and everything else. And
It is, but hold on, Mark, because that is
go ahead.
that right there. Let's talk about that. Let's talk about emotions and ego and how you
That's it.
did that, because that is big. That is huge, right? Both
It is.
legacy of this credit union
That's
and
it.
how it served its membership and the difference it made in families and the way you're connected to the community.
Yes.
How did you work through that?
Well, it was tough because if you think you right in your head, and I was convinced that way of thinking was getting contagious, but you had to get people buying in. And I still might, I don't think I'm saying anything out of turn. I think I have a couple of directors that they can't get there, and they weren't going so far as to say, I want to scuttle a deal or vote against it. It's like, no, you know what? It took longer than anybody else, but I finally had clarity on this. And it's hurtful to me, meaning some of these directives that have had tenure way before I got here. It's like I just can't go. That's a bridge too far. I need to segue out. This will be my last hurrah, and I can't be any part of the combined entity. I might have an account here and those types of things, but I can't be a director anymore. I just can't get there. This is where I have to leave it. I respect that. I understand. But this is where the organization had to go. And, you start baby steps. I was brought my C-suite in and say, guys, look, this is what's going on. And not that you all can't see it, because we're seeing the financials all the time and understand what we're dealing with here. So that it just started to accrue to people. And that, fast forward, that's where we are today. So everybody's on board. I'm not getting any inkling of anybody saying, no, this is a big mistake. It is not.
So the process of getting yourself, just because it sounds like it started from your own like internal reflections and just awareness of the trend, right? And then just seeing the trend and knowing that you can't defeat the trend. Am I right? That's sort of where it began, is in your own head, the awareness that we can't solve this.
Yeah, and it's like, you're going to pick a fight with the locomotive. So reaching out to people that, some tells me I know who's going to win that. It's not going to be pretty. And reaching out to people that are wealths of knowledge and see something from a very vast sphere, and who were always very helpful to me. And I'm not just saying that because he's on the line with us, but Mike and company of Olden Lane, just indescribably helpful. And I needed Mike and company to sit with me and say, well, let's really understand this the best that we can. And then you start talking to others. But I can't say enough about what Olden Lane has contributed to us and me.
So yeah, let's, can we talk a bit about that conversation? So you reach out to Mike to talk just sort of philosophically about the challenges of the credit union and what are the levers you can pull to address those challenges, is that how it started?
You could, there's nothing wrong with what you were saying, but I guess I go a little bit further back with Mike that helped this process. So let me step back. Mike got us the 12 million in secondary capital, and that was part of the ways that we grew. That was 2017, 2018. So he and I have been, friends ever since. But when we were getting 12 million in secondary capital, Mike, wasn't that one of the largest single pieces in the country?
It might have been the largest at the
The
time. Yeah.
single $12 million. I mean, that's lunch now. As far as secondary capital.
It's a good lunch,
I mean,
but it's lunch.
well, okay, you got an extra martini in there, but it's Mike and Olden Lane took that and ran with. So many credit unions were looking to expand, and secondary was a big piece of that. So they did $200 million pieces. But going back to all that conversation, what it meant to us. So I started there with Mike saying, well, okay, maybe we just need more secondary capital to provide some growth. And no, not after COVID, not after the interest rates. It just didn't make any sense anymore. So that's where he was instrumental in helping say, well, let's look at all the options. Let's sit down with it. Let's consider things that you never considered before. And he was right. I never considered merging with another one. I was always saying, well, it's me. I'm going to grow the credit union, and we're going to stay like we are.
That's what you've been
and
doing.
Never realized, and maybe I just need to put it. I need to put a different to throw my career, and we've got to put a different hat on and see how it fits. So sometimes it's hard. It's hard for people, but there's clarity. Okay, you put the hat on, you look at it, you kind of check it out, and it added the clarity that was much needed. Not that you don't know within yourself, but it's like, okay, that it's our turn. We're going to do something different, and we're going to be not the continuing credit union.
Yeah, a difficult conclusion to reach, but you reached it with analysis, right? You went and you did some pro forma with additional capital or other things that you might have considered, and you didn't see it solving the problem. And,
I agree with
that's where you end up going, whoa, we need to rethink everything.
And Doug, when approaching my board or C-suite, just going through the whole thing with everybody that you need to tell about this, and it's like, guys, who do we think we are? Community banks, $1 billion plus that have merged out around here. Just looking at local examples, things that everybody remembered. We had a $10 billion, 100-plus-year-old bank here. They merged. That was part of the credit crisis. That bit them. 10 billion. Oh, talk about economies of scale. They could solve any problem. Of course they could. They merged. There was one that was twice that big because it made sense for them. They weren't caught in a pinch. There was a $20 billion bank here that merged. So they're no longer here. It came up to another name. So it's like when you kind of get to the board, it's like, what, we think you're invincible at 900 million in assets when you got examples here that were 20 times multiple, that they had to have their set of meetings like this, and they made a decision. So we got to be open to this and be pragmatic and know at the end of the rainbow, it's got to be for the membership. You get there. And all the other stuff's got to be set aside. All this other legacy stuff and well, what's going to happen to the name and all? No. You got to get past.
Is part of it, do you actually identify the things that the membership will receive if we go through with this? Do you actually identify those individual things in advance, or is it more high level strategy about just assets and loan ratios and ability to continue to be viable?
Both. And when Mike and I were talking about it when it was the idea at its infancy, then you start talking about both of those, like some type of strategic idea, what goes forward, but also you get down to the bread and butter. It's like, okay, take a couple of these other credit unions. Let's look at their rates, pull up their website, see what's going on, see where their branches are, see what any of the products and services that they have. And you quickly see you'll see what's going on with somebody else's shop because it's all online, and that, believe it or not, is not the hardest part. You could see it very clearly.
Mm-hmm. And the arguments that you hear in the industry about the loss, there's loss of the smaller credit unions. The mergers are losses of credit unions. And obviously there's a lot of emotional weight in those words, but what does the membership gain? Like, when you looked at the situation, was the membership going to gain lower rates of lending and higher rates of deposit? Is that what outcomes that you identified?
Between that and just other things, but I also wanted to say something that's kind of just a catch-all phrase, but just bear with it. I think technology consolidates an industry, and I'm just not talking about us. So when all of the technology, like right now, all this, the thing is AI. That's the buzzwords. I have no idea how we were going to put AI in our credit union and really get into it. Can we afford it? What's it going to look and smell like? What are other people doing and things? So we thought we were good up to this point. We were, and at the usual stuff that electronic services and you could do what you need by off your smart devices and all those things. That's fine, but that I think that was you got to talk about the small credit union. You got credit unions that their members don't have access to an ATM. So what are they doing? Well, that small credit union, you've got a lot of loyal people, maybe from the original seg, but as a practical matter, Doug, I think we both know that that's not the members that are a member of that $8 million credit union, 80 million. I don't think that credit union could be their primary financial institution. So that's where it goes. And I've had credit union CEOs tell me, well, you know what, we don't want to be. Well, that's an interesting approach, but it's none of my business. Somebody saying, I don't want to be my member's primary financial institution. Okay. Okay, none of my business, but it's like going to reject all this other stuff. And who needs ATMs and who needs, phone access to my account and all those things. But I think that's their way of justifying to themselves why, no, I don't have to grow. I'm 39 million and we're gonna be just fine here. And we made $12,000 last year of net income. So why do I need to do anything differently?
So you reach this point and you make a very substantial emotional journey from acquirer to, wow, I need to look at a potential being merged in. And then how do you evaluate the players and how do you reach your selection?
That wasn't so hard. Again, and Mike was a tremendous help there. So it was, I guess the first thing was for us, and it could be different to anybody that's listening to this program. The credit unions that were here already and were gaining a lot of steam. There was just a lot of energy coming here. So it's like, well, let's look at them first because it's not somebody that's coming from, let's say, 3 states over, and we had that have no footprint at all here. So you're going to start with me. All right, that's an argument worth having, but that was fine. But I think the ones just fast forwarding, the ones that were already here made more sense to our selection. Again, somebody else, it could be different. We got to be open to that. But somebody that was here already, I mean, like right down the street in a very significant way, meaning a lot of branch offices, a lot of products and services coming here at prices that it would be difficult, if not impossible, for me to compete with.
So that's an interesting takeaway then. So prices that were difficult or impossible to compete with means that the membership may have gained some advantages, right?
Absolutely.
From going forward with the merger, you serve the membership potentially better.
Positively.
And then so now, as we're in the spring of 2025, where are things now? What's happened now?
Well, a lot of discussion last year led to an application in December going to NCUA because it's the first process. Part of this process. So we just got approval like a week ago, 2 weeks ago. So that was a December submission and in a late February, I think, final result. So we're in the process of scheduling the meeting of our members since we're not going to be the continuing. That we hope to have in April. And then the go live date, and these are the high points, obviously. I'm leaving out a lot of minutia. But we hope the go live date will be July 1, where my board will no longer exist. They're going to be in an advisory capacity, but then it's going to be 100% Kiesler. And then to get on data system conversions, that is the longest piece. That after all the requirements are met, then I think we're looking at converting the core systems in first quarter 26. So start to finish, let's say mid 24 to first quarter 26. That's what that means here. You got two credit unions that are by NCUA's definition complex. They'll leave it to their definition of that, but I don't think that, I don't disagree with it. So it takes that long to put everything together.
Well, huge transaction. So a couple
Yes,
of tactical details to see if we can talk about it. And again, say no if we can't talk about them. So first place, in order to keep your senior staff into the new organization, did you design any sort of retention strategy to keep them into the new time? Because folks don't like change, right? Change is not popular.
No,
How do you keep your staff to the other side?
And you realize how many people don't like change when you reach a point where it's not only just the C-suite. Okay, at some point I got to draft an email and get it out to every single soul. Then you see what, because you by then you're so used to the idea because you've taken it this far. But you got a whole bunch of people that are just going about their day. What's for lunch? I got to pick up milk going home, and all of a sudden it's so again. It was so well crafted and negotiated, meaning with Mike and Olden Lane to help me get to the continuing credit union, in this case Keesler, and sitting down with them and them realizing what they knew, but they didn't. No disrespect to them, I don't think that they knew how good it was going to be in terms of looking more deeply at the financials, the footprint, the structures that we have. It was going to all accrue to them. So Mike was very, very good at putting together that initial contract that included keeping everybody on for a minimum of 3 years, minimum, everybody, not just me, everybody in all 150 of my employees, to give them peace of mind and no salary reductions. That was by contract. So that's what's on everybody's mind. I mean, by the time it hits the employee, am I going to be laid off? And when? In 15 minutes from now or 15 days from now? Zero of that. And Keesler knew that prior to them coming to us, because they are proud of the fact that in their 75-year history, they've never laid off anybody. So they take that very seriously. And we like that about them, amongst other things.
So
but it was Olden Lane's help in putting together a deal that was so win-win that we all fell in love with it. And we're already in love with Mike, but we fell in love with Mike now and all of the work that he did for this. Just the truth.
Maybe that's what we'll title the podcast: "How to Fall in Love with Mike." Yes, that would be a unique.
Okay, I might get a little jealous over that. That's but you go ahead.
All right. So you've gotten your approval. You retained your staff with a 3-year retention plan, and you're getting ready for an annual meeting that could be really quite a new adventure. How are you thinking about that?
Yeah, and Doug, the ones that we had taken in, of course, we were sitting at the other side of the table, but I saw where people from other credit unions, they would come to that meeting with very specific questions, and they did their homework, and they usually the voting process, just by regulation, the voting process is going to happen largely up to that point. People are going to get ballots, people are going to be notified by mail, people all within NCUA's regulation. So I would say, or it's been my experience, that 90% of the voting is happening before that meeting day. And it's not let's say a credit union with 20,000 members, you might have 1% of that physically show up to the meeting. So let's say 200 people. And I'm prepared for all their questions. I mean, this uh, this process is on. It's going. I mean, the train left the station months ago, so I'm interested to hear and see what's on their mind. Answer any questions. Just tell them the truth. Uh, and some say, well, this is not for me. I've had that on a very minority of the cases, but otherwise, if anybody wants to look at it objectively, because we had to times 100 getting to this point. So if somebody wants to be objective about this, I think they will see why we're doing this.
Yeah, very interesting story to change from one direction so dramatically to the other. I would almost call that a bravery to be able to do that. It's difficult. That's not a small thing that you've done in service to the membership.
That's correct.
So with that, I don't know what else to ask. It's really a fascinating journey that you've gone through. And so you're going to be partially finished in 25, fully technology and merged together in 26. And then we'll see what the entity looks like on the other side.
Yes, sir. The largest credit union in Mississippi and the largest credit union in Louisiana. That's what we're going to see on the other side, minimum. That's just going to be a fact. It is a big deal.
Very, very much so. Well, so let's just give you the opportunity for any final thoughts, final messages to the credit union movement from either of you, Mark and Mike. Just any other things that you want our listeners to know about this sort of subject, because it's a little contentious, right? This is a subject that's delicate because credit unions have, and actually one of the things I love about credit unions is there's an emotional connection between you and this entity. It means something. It's something you built that it comes from generations sometimes, from where your parents used to work or your grandparents used to work. It means something. So how do you, what messages would you offer to the movement?
Well, a couple of things. First of all, I've said a lot. I want Mike to chime in because his words are so valuable. But something that Mike always was telling me, he says, you're playing defense now. Ever since COVID came in and the things we talked about earlier, you're playing defense and you're doing okay. But when exactly are you going to play offense? And that I could put, I could get a tattoo of that and I could put it on my tombstone because it was so true. And I see so many other credit unions. If you're crossing that bridge, you're on the structure already. Okay, if you keep playing defense, I'm going to get out of this and I'm going to get out of this. When the whole world is surrounding you, just make an objective decision, because that's what we had to come to the realization. It's like, you know what? By the time, and I told my board, there is zero part of me that thinks that we're not going to come out of this hard part. Okay, zero. We were going to have, we have the people on board, we have the assets, we have all those things. We were going to come out. It might take another 2 or 3 years. We were going to come out, we were going to make money and all those things. But then, who is already here, where are they going to be? And it's like, okay, you want to go toe to toe with them then? Well, the offers are not going to be on the table. And Mike and I had very candid conversations about that. And he quickly said, look, I mean, there's time frames to things, and it's not up to you, because you've got the economy, you've got other financial institutions, you've got other things going on, and you've got to seize that opportunity when it's like right in front of you, and it's right there for the taking. So further delay was not going to be our friend. But anyway, I'll yield everything to Mike.
Well, look, I mean, there's not a lot to add to that wisdom. Mark gets it. He is willing to put aside his ego and to understand that you can only have one North Star, and that North Star is your membership. And so when you look at these things, that's the constituency you have to be responsive to. At the end of the day, the decisions that you make in the C-suite or at the board level are decisions where your member is counting on you to do the right thing. And I can assure you, in this transaction, because of the wisdom of Mark, honestly, because of the great nature of Andy and his team on the other side. We've built something here that is going to be lasting, and the members in this new Keesler, when it comes out the other side after the vote and after the consolidation efforts, it's going to be very strong. It's going to be very powerful, and it's going to be an example for others. And at Olden Lane, we take very seriously our obligation to this industry. We understand that there's a legacy, a heritage, and a brand whenever there's a merging credit union. And, our job is to do it in a way that respects that and always finds a path that makes sense. And in this case, we're very proud of where this one's going. And it really is a tribute to Mark, his team, very strong team, honestly, and it's one thing to sit here and talk about it. There were very tough days. There were very tough decisions to be made. There were very difficult conversations that were a part of this. I mean, there was one particular night on the roof deck of Mark's main branch, which was very difficult. But, at the end of the day, we're getting there, and we're doing something that we're all going to be very, very proud of.
That's it.
Go ahead, Mark. Were you saying something?
Oh, no, all the above.
Well, Mark and Mike, thank you for bringing this topic idea up. I think, again, somewhat contentious in the credit union industry, the shrinking of the industry as far as the number of credit unions, but perhaps the growing of the value add to the member, maybe the strengthening of the industry, just less entities individually. I think that would be an interesting metric to measure. I don't have the data for, but I hope that is the case. And thank you both for your leadership and for your service to the credit union movement.
Pleasure, Doug. Thanks for
Appreciate
having me.
it. Thanks, Doug.
That's all the insider credit union knowledge we have for this episode. Are you enjoying the conversation? Be sure to subscribe and share your thoughts with other credit union leaders by leaving us a review. See you next time on See You on the Show.
The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Economic forecasts set forth may not develop as predicted. All performance referenced is historical and is no guarantee of future results. Indexes are unmanaged and cannot